Good afternoon, everyone, and good evening to those on the East Coast. This is Jamie Parrott, the Vice President and Chief Operating Officer for MedResults Network. And as always, I want to thank everyone who came out to attend our presentation live today. We're very excited to have invited our partners, physician growth partners, out to join us for the presentation. And typically I do an introduction, but as our CEO has an extensive background in M&A, I actually invited him to give a more formal introduction of our speakers today. So in just a minute, I'm going to turn it over to Jeff Rutledge, the CEO of MedResults Network. But before I do that, there's just a couple housekeeping reminders, so to speak, that I wanted to bring up. One is that if you have questions, we certainly encourage it. Take a look at your chat feature on the webinar, and don't hesitate to send us your questions throughout the presentation. Our speakers will get to those questions by the end of the event. And then secondly, if you do have questions and you don't want to type them into the chat feature, but you want to get some personal one-on-one time with our speakers, we do have an automated survey that will pop up following the close of the webinar. If you could just take 30 seconds to fill that out, that not only gives us the opportunity to get your feedback, but it will give you the opportunity to ask questions of our presenters. So with all that said, I'm very excited to introduce Jeff Rutledge, the CEO of MedResults Network.
Hello, and thank you for taking time out to participate in this. As Jamie had alluded, I have a background in physician services and actually have been involved in 4 private equity-backed physician practice management companies or platform companies or roll-ups or whatever anybody calls it today. And I thought it was really important for us to give you guys the opportunity to listen to some folks that have a lot of experience that's recent and relevant. Over the past 12 months, we've gotten a number of calls in reference to specifically in the dermatology market, the private equity participation and activity, and all these new giants that are being created. I've been around long enough to know that when a practice is calling me and asking questions, there's such a thing as asking the right questions and the wrong questions. And from that, I realized that we really need to get our members educated. We're not just getting calls from members about participating with these groups. We're also getting private equity groups that are feeling out the markets and whatnot. And recently, within the last 3 to 5 months, we've got a number of calls inquiring about the med spa industry as well as plastic surgery. So this is all relevant to all of us. And I think there's probably going to be a lot of things kind of overlapping and crossing the next couple of years with the private equity participation. But I think what's important, and these guys will tell you a little bit, they're going to scratch the surface. We hope that we can invite these guys back as well as other types of advisors and do a couple of these over the next 6 months. As Jamie had indicated with the survey that you'll get, if you guys have a lot of interest, please let us know that if you want to do more of these, we will. So what I want to do is introduce to you 2 individuals that come from Physician Growth Partners. I've known these guys for a few years. They were formerly with Brown, Gibbons, and Lang, which has had a lot of activity and experience in the past couple of years with some of these private equity derm companies as well as other companies. These guys have been in the trenches in terms of deal creation, due diligence, advising both the private equity as well as the physician practices that partake. So I want to introduce to you Michael Cohen and Ezra Simons. They're both partners and founders of PGB. Guys, go ahead and take it away.
Thanks, Jeff and Jamie, and appreciate you all allowing us to speak today. So this is Michael Cohen speaking, one of the founding members of Physician Growth Partners. And as Jeff alluded to, we came from a group called Brown, Gibbons, Lang, which is a healthcare investment bank that focused on transactions with, mostly with physician practices. So my experience was really focused within the specialty physician practice world, and really focused with the larger physician practice groups, whether it was in, dermatology, ophthalmology, pain management, orthopedics, ENT, emergency medicine, et cetera. I mean, you name a specialty, and we had some involvement with it. And specifically, what we saw was that, all the investment banks that are out in the marketplace are really focused on educating all of the larger physician practices. Let's consider it, $4 or $5 million in earnings or cash flow and above, right? And not many groups have been focusing on really educating and preparing physicians to go to market and execute on transactions that ensures that they receive an optimal outcome, which is actually how Physician Growth Partners was founded. So with my experience being as a sell-side investment banker and Ezra Simon's experience on being through management consulting and being on the buy-side team, we actually founded Physician Growth Partners with the focus on really helping educate the smaller physician practice world not only on the transaction process, but also on preparing them to go to market. So we were founded in 2017. We've been in business now for a little bit over a year. And, our model has really resonated well with the market, where we spend a lot of time initially focusing on preparing groups to go to market, whether that is through, centralizing the call center or billing center, helping with recruitment, maybe even looking at a couple acquisitions and putting them under the umbrella before executing a transaction, or, identifying, some holes within the staffing mix, et cetera, before we take it out to market, in order to ensure that once we take it out to market, we're able to position and tell the right story with the practice in order to ensure that they receive an optimal outcome. So I'll turn it over to Ezra to talk a little bit more about his background, and we'll get this presentation started.
Hey guys, my name is Ezra Simon, as Mike said. Michael and I were colleagues at Brown Gibbons Lang. My experience was also exclusively in healthcare within provider services. My side of the house was, generally speaking, management consulting and buy-side advisory. We would work with groups to evaluate their compensation structures, work on their marketing strategies, really help drive operational efficiency, be it in the call center and the revenue cycle process, and things of that nature to help groups compete better in the market and ultimately prepare for a transaction. So when Michael and I founded Physician Growth Partners, we saw the unique opportunity to parlay our separate but equally valuable skill set to help the physician practice world not just go to market, but understand what kinds of things drive value, how to execute things in the short term so as not to leave anything on the table, and then ultimately have a successful outcome that achieves the goals of the shareholders. And to that end, today we'll cover kind of how we view what's going on in healthcare, kind of what's driving some of the activity, who's participating in that activity, what types of things impact valuation, how these strategies work, and things that, as shareholders, medical directors, and sort of other industry participants, at least should be on your mind, as you move forward.
And just one thing to note here, we will have a focus within called the dermatology sector. However, this does also apply to some of the other relevant specialties, which includes the participants that focus in on MedResults, and as well as plastic surgery, as well as OBGYN groups, right? Women's health. When you look at the consolidation wave, it's not really only happening in derm. It's actually happening in a lot of other specialties, as I mentioned, right? Ophthalmology, pain management, behavioral health, women's health, starting to see some things come to fruition in urology. And, the benefit when you kind of look at the consolidation wave happening, all of these specialties will also look to tack on ancillary services, which could be a component where it is med spas or it is plastic surgery, where they'll use that as an avenue to maintain that kind of revenue stream and maintain that population and become that one-stop shop. And we'll definitely get into that later in the presentation.
So just from a tailwind perspective, as Mike and I were thinking through this and as far as how we're seeing things, we see strong capital markets, as a conversation starter in a lot of cases. We see very cheap cost of debt. We see historical levels of liquidity and dry powder with which institutional investors have access to. We continue to see healthcare be a segment of focus for any number of reasons. Largely we believe that those are around, call it, government spend, attractive demographics, in some of the upcoming and current changes that are going on, such as the move from volume to value. In any event, we see competition between institutional investors that are seeking healthcare assets to be at an all-time high, and subsequently driving transaction value within certain subspecialties coming to the forefront. So to that end, within dermatology, we kind of see three large cornerstones that are driving things. Dermatology is a huge market. It is a growing market. It has continued to grow over the last several years and expected going forward to continue to do so. There is a unique imbalance between supply and demand, where there are less physicians that are coming out of residency and joining the specialty than there are those that are retiring. Combine that with a growing population within the United States that have indications that are relevant to the specialty, alongside a growing sort of indication set. In other words, a growing caseload for dermatologists is sort of leading to all kinds of activity in the sector. And it is a place that equity investors and others are starting to really focus their time and have been for the last handful of years. The institutional investment community, sees it as highly fragmented. Many providers are spending very limited groups of providers are in group practices that are, more than 5 providers. Opportunities to benefit from scale are abundant, whether it's in the call center, the marketing strategy, or securing, group purchasing leverage from that perspective. And, finally, there's huge opportunities to realize synergies across these platforms.
Yeah, and when you kind of look at, the trend in activity, right, and you see within the, obviously you see on the graph to the right on the activity that's happening specifically within dermatology. The real question is, again, what is driving this consolidation rate? And I know Ezra mentioned a lot of kind of items through a macro perspective, but it's when you look at specifically within a specialty, right, there is a significant benefit from achieving scale. One being capturing ancillary services in-house, right? So for specifically when you look at general dermatology, right, there's a lot of relevant ancillary components with general derm. When you lead with medicine, right, you can triple that patient to different ancillary components, including, Mohs, path laboratory, med spas, plastic surgery, etc. Right, and we'll talk about that funnel shortly. Right, and again, as you continue to grow, there's opportunities for product cost savings, and being part of a group purchasing organization just like MRN, there's significant benefits to that as well. As well as a couple other items would be national contracting status with vendors, right? You have better opportunity to leverage your brand awareness and marketing comes into play significantly here. And at the end of the day, if you achieve the scale that you're out to achieve, right, you're then going to have some leverage with payers as well. So, I mean, if you look at what's happening specifically within dermatology, I mean, consolidation has been really happening over the last 5 years. And by consolidation, there has been, call it roll-ups, where private equity invests in an initial platform. And once they invest in an initial platform, they then go ahead and execute a buy and build strategy. And as they execute the buy and build strategy and acquire other call it dermatology practices, and then they tuck them under their umbrella, they're then able to achieve, as I said before, the benefits from scale. And it doesn't only have to be through acquisition. You benefit from scale through recruitment. You benefit through scale through marketing, and then geographic expansion as well.
So, as Michael said, dermatology consolidation, is an interesting point right now. It's been really active since, call it in earnest, 2011. With platform activity taking place, in kind of an aggressive fashion. And one of the things that we see is as private equity groups get involved, they become, bigger and bigger. The idea is to trade that up to a larger equity firm that can then do bigger and bigger deals. And, ultimately, where dentistry is, for example, is at the point where, you have 3 national platforms that have been traded through the private equity cycle a handful of times. You have, 20 plus smaller platforms operating around the country. And we're starting to see some of that take place in dermatology as well, just looking at the velocity of transaction activity that's happened after 2016 versus the velocity of transaction activity that took place before 2016.
One thing to mention, just to be clear, we're starting to see private equity groups start completing their second transaction, right? A good example you would see is Advanced Dermatology, right? So Advanced Dermatology, Audax Group acquired Advanced Dermatology in October 2011. Audax is a private equity firm. They then execute a growth strategy where now they're on their second sale, and then they recently completed that second sale in May of 2016 to even a larger private equity group, which now that larger private equity group, instead of having a regional growth strategy, this group has a national growth strategy. So the next slide really is showing the geographic landscape of the private equity group's initial investment in dermatology platforms. One thing to note here, this doesn't articulate all the acquisitions that these platforms have made around the country. This is only noting where they made the initial platform. Because if you look like groups like Advanced Dermatology or Forefront Dermatology or U.S. Dermatology Partners, they're in 30, 40 locations, 30, 40 states across the country.
So, to that end, just sort of unpacking the strategies, from our perspective, there are, 2 types of buyers out there. One buyer set is what we call a financial buyer. That is a private equity firm that is seeking to make, all the way to the top left, that initial acquisition. So they're looking for a group that has, size, scale, and sophistication in a marketplace. And with that, they're looking to leverage that initial acquisition to acquire further scale, centralize their operations, and enhance revenue. So that leads to the other type of buyer, which is considered a strategic buyer. So from there, that is a platform that has already been invested in by private equity, such as Advanced Dermatology, is in the process of continuing to build scale through follow-on acquisitions where they're seeking smaller, acquisition opportunities with less scale to roll them into their umbrella and ultimately continue the operational optimization.
Yeah, just to be clear here, so when we look at this slide specifically on platform growth, this really shows what private equity tries to achieve once they acquire a platform. And this kind of slide really articulates how they go ahead and execute a growth strategy, and at the end of the day, how they'll benefit from scale. So with that said, Turning to the next slide and kind of continuing to harp on this, benefit from achieving scale and integration. As you see in this slide, right, the service offering below is what a integrated dermatology platform like a Forefront Dermatology that's been consolidating and has been very successful is out there to achieve, right? And as you see within this funnel, yes, they might have started out with medical, surgical, and cosmetic dermatology, but then they expanded into Mohs, clinical research and laboratory. But at the end of the day, they're continuing to figure out and understand, hey, look, what are our other ways that we can expand and grow our platform to the next level? Because they ultimately need to provide a return to their investors. And what we're starting to see now is med spas and plastic surgery groups actually coming to the equation under the dermatology platform's umbrella as an ancillary offering, whether they hire or build out a new med spa location, or even they go ahead and acquire one in the current marketplace.
So, we summarize, maximum value in kind of three ways. And the question is always, how do I make sure that, I'm not leaving anything on the table? What should people be thinking about as they think through next steps for themselves, right? And we kind of drop that into three buckets. We believe that, operational infrastructure is exceptionally important. Taking your back office functions seriously, monitoring and budgeting the business, using technology to the best of your ability, and demonstrating cost intelligence relative to joining a group like MRN for GPO savings, or monitoring your consumable cost per patient or per customer. Those are things that people take seriously and give credit for. Then we sort of move over to top line growth. Top line growth, from our perspective, is the notion that you're out in the marketplace, expanding your referral strategies, you're recruiting providers, you are enhancing the customer value that is coming in the door. And finally, geographic expansion. That's the idea of either completing one-off organic expansion opportunities where you're opening a new market and trying a new service line, or be it through acquisition where you're acquiring another practice and using that under your platform to move forward.
So, and just to touch on this slide, I think this slide gives a good grasp of 2 points here. One point being, how do you really maximize value in a transaction process, right? Are there any of these near-term initiatives that could be put into place in order to be able to receive that credit in the marketplace? So whether, as Ezra mentioned, whether it is some cost-saving initiative or a recruitment strategy, or expanding your service offering, and or even starting or having an acquisition strategy, et cetera. And number two, this slide really explains what private equity groups view as platforms, right? Obviously, you have the groups out of the marketplace that are touching 6 or 7 out of the 12 bullets or whatever it is. But at the end of the day, in order really to achieve an optimal outcome and be considered that initial platform, you really have to be performing under these 3 buckets, which is really have an integrated and optimized infrastructure. You really have to show a track record of top line growth. And at the end of the day, you also have to have the ability to show and prove yourself, prove out to the potential partner that you can expand geographically, whether it is through acquisition or it is through de novo opening up new offices. Because at the end of the day, if you're considered that, as the slide before this says, the initial acquisition, they're going to want to see, hey, look, can you prove yourself out where you can give us the guidance that we need to accelerate the growth strategy that you have done in the past. And these are just the different items that they would look for to evaluate and be comfortable with backing your specific practice, rather than treating you as an add-on acquisition to their initial platform. So when you are looking at potential strategic alternatives, right? There aren't just, you know, two different exit strategies, whether you can remain independent and continue doing what you're doing, or you could do a full sale, right? There's a lot of items in between that can be considered a potential transaction, and each of these different opportunities will be determined based on the goals and succession plans of the practice or the shareholders, right? So if you kind of look at it from left to right, you have the full sale to a strategic, where you give up 100% of your business to a strategic buyer, and you become an employee. You have a majority sale to a strategic, where you sell 80 to 90% of your equity, and you roll over 10 to 20% and participate in the upside of a second transaction. When you kind of move down the line here, there's a majority sale to a financial sponsor. So what that really means is, as we mentioned, is that initial acquisition, or it is that initial platform where they're going to actually expect you to roll over, call it 40% of your earnings into the new company in order to ensure that they are aligned, the shareholders are aligned with the private equity firm in really growing the platform to that second bite of the apple. And as you go on, there's also even an opportunity to do a minority sale, where you sell less than 50% of your shares, where then a financial sponsor would utilize the capital that they deploy for an aggressive growth strategy. Or at the end of the day, you can remain independent. And what this graphic really represents is really shows how each of these different categories, whether it's cash proceeds, leadership involvement, ownership, being able to capitalize on the market, or control, what each of these different options represent.
So sort of trying to bring it full circle, from our perspective, succession planning is really about, what are the options, and of that, what variables you have within that. So at a high level, I think that obviously you're thinking about, what the purchase price is and whether that's fair. But more than that, as you kind of peel it back, I think that it's really about thinking through, after you do that sale, how does your life change, right? How does the control you have over what you built change from, today versus 6 months later? How are you used to using your relationships in the market versus, how you're expected to do that now? How much say do you have in kind of the growth and sort of the trajectory of the new business that you're a part of? What are your leadership responsibilities? And with that, I think it is, really important to, be counseled by the right group of people to help lay out all of those different variables and craft a strategy relative to addressing those.
Yeah, and really what this really shows is called, as I mentioned, the different variables, right, that comes with a potential strategic option that we mentioned in the previous slide. And what it really determines is, based on these different factors, there's an opportunity to determine what the best path forward is for a potential shareholder, and in order to evaluate the strategic alternative and ensure that they're going forward, they're taking the steps, the best path forward, right? So, it is very important prior to exploring a potential sale to spend time in the beginning and take a step back and really determine what are your succession plans and goals, and what is driving you to do potential sale, and how many years left do you have in the tank. As those are all factors that will determine the appropriate strategy to ensure that you are receiving an optimal outcome in the marketplace, and you are achieving something that you feel comfortable doing. Because once that transaction happens, right, it is a big, you're basically giving up your baby. So it is important to make sure you're evaluating the appropriate partner and appropriate strategy to ensure that you get comfortable with a potential transaction. So now I guess we will open up for questions here.
Ezra and Michael, this is Jamie. I just want to say thank you for your presentation. We actually had a couple questions come from attendees who couldn't make it today. They registered and they received a few emails. And I thought maybe you could answer those for the benefit of all of our attendees who are here live today. The first question that we got was, what can I do to improve the value of my practice? And as you know, we have a number of different types of practices on the line, med spas, plastic surgeons, facial plastics, derm. What types of things can be done to improve the value of their practices if they're looking to check?
Yeah, I'll take a first swing. Yeah, I think it depends a lot on goals and timing. I think that the answer to that question for somebody that has decided, an exit 6 months from now is what they're looking for is a lot different than somebody who says, okay, I want to do this in 3 years. Toward the shorter end of that cycle, I would say the places to take a look are in the cost structure, taking a look at, where the money's going month over month and understanding if there's, any excess waste going on that we can rein in quickly with a little bit of oversight. I'd take a look at, I think the marketing strategy is a big piece as far as what's going on digitally, and how we're engaging people. And one of the other things I'd be thinking about is how we're engaging with patients and kind of how we're communicating with them. I think that those are sort of short-term things that you're able to act on in the short term that can create some value. In the longer term, I think it's more strategy. I think it's more about proving out some of the broader strategy points relative to provider recruitment and service line expansion, because you have some time where you can sort of take steps to really, really benefit the practice if you have that long-term view.
Perfect. No, thank you for that. And the second question that we received was, once a practice goes down this path, how, the physician asked, how do I know that I've gotten a good offer?
Sorry, can you repeat that question?
Yeah, one of our physicians asked, once they went down this path, how do they know that they've gotten a good offer?
Yeah, so the whole thought process there is by bringing on a representative, called a transaction advisor or even an investment banker to represent you in a formal transaction process. The role of that investment banker is to evaluate all the opportunities that are out there that would be based on the goals and succession plans of the doctor, to ensure that they receive it. They receive an optimal outcome in the marketplace. And what I mean by that is, when you hire a representative, they'll run you through a transaction process, which they'll contact all the all the buyers that they believe that would be interested in a potential acquisition opportunity. And what would happen then would be there would be a process where those buyers would then submit an offer, and it's called an indication of interest. And what happens there when they submit an indication of interest is you then get to evaluate all the offers that came to the table, and then you can determine which offer is best suited for you all to go down a path forward to potentially transact with that specific party that best suits your needs or wants.
Great.
So,
good. Sorry to cut you off.
Yeah, no problem. And all I was just going to say is you have an opportunity to evaluate all the different potential parties that would be interested, and you really get to evaluate what the market would be willing to pay for your practice to ensure that you're not leaving any money on the table.
Excellent. We had a final question as well. I know you spoke a lot about these PE firms that are acquiring practices and larger roll-ups, but one of our members asked, said, I want to stay independent. What should I be doing to compete?
Yeah, I think I would start with the goals question, and kind of where you're looking to land and what you want to be doing, 5 years, say, from now. But I think it involves, especially in a market where there are, private equity participants, I think it involves today, you really got to step your game up, I think. And I mean that through marketing, as far as being visible and taking that strategy pretty seriously and interacting with people kind of at the right time. I think patient experience is becoming exceptionally important as far as, ensuring that as patients and customers interact with you, whether they pick up the phone, they want to talk to somebody. Once they get in the office, they want it to be clear and concise. When they leave, they want to be followed up with, et cetera. Taking that patient experience seriously, I think, is becoming exceptionally more important. I don't think you can undervalue the importance of access. I think the medical consumer today, as competition heats up, wants to be seen promptly. They want to, get on the schedule when it works for them, et cetera. So paying attention to things like that, I think, are really important. And then ultimately, I think thinking strategically, in really thinking about where you want to be a year and a half from now and using that to guide what you're doing has become, exceptionally more important.
Yeah, and again, I think that on top of it all, reputation, relationships, and leading with, call it clinical excellence, is still the backbone, and it's still very relevant in the marketplace. And that is going to continue to be important in order to ensure that, that you're able to continue to be successful in a marketplace that is consolidated.
Great. Well, that appears to be it for our questions today, gentlemen. And I want to thank you, Ezra, and Michael, for joining us today and educating our members and all of our listeners out there. To everyone on the line, once again, if you missed my brief introduction, if you'll take just 30 seconds to fill out an automated survey that's going to pop up directly following the close of this presentation, that would be extremely helpful for us to give us some valuable feedback about today's content. And also it gives you an opportunity, if you do have a question, you can certainly use that survey to ask it. If I have no more questions, I want to thank everyone one more time, and we look forward to seeing you at our next educational webinar. Thank you so much, and have a lovely holiday weekend.